Good evening, everybody. It is November something, 5th, and it was still 61 degrees here in Pittsburgh. Okay, tonight we're going to work a little bit backwards in the sense that we're going to go through the positions that we've got on, why we've got them on, and then we're going to go back through the different signals and patterns to show why we've got into those positions. The reason I'm doing this is still trying to make everybody kind of concentrate on a little bit on concentrating on 4 or 5 trading styles or trading patterns that they can become very skilled, an expert at. And there won't be any shortage of positions. So what we saw today was that the Dow basically opened where it closed on Friday and came right back up again. Now, the thing that we had to watch today was the Dow was trying to come up. At the same time, the NASDAQ was heading down, but before the end of the day, the NASDAQ pulled back up and came back up above the T-line. So that was kind of the battle that we were watching between the bulls and the bears, whether the market was going to be taken down or taken up. And kind of a pivotal trader, obviously, was Apple, trading lower. So it's come from the 220 down to the 200 area, so down 10% or so over the last couple of days. So let's go through what we should be looking for. And this is why I've been stressing very much trading the patterns, because they put you in 2 benefits. One, we can recognize when they're working, obviously, and when they do work, the returns are going to be inordinately better than just an uptrending stock in an uptrending market. And they're going to work relatively well, even when the market's not going completely in your favor or an overall the right direction, because a fry pan bottom is one that look how long it takes for the investor sentiment to build up. So something's happening in a fry pan bottom that's not directly correlated to what the overall market is doing. So our recommendation on NIHD, I think we recommended it down in here and then re-recommended it as it was about ready to break out through this level. So the expectation should be, is that if we've had a move like this, in a fry pan bottom, we could have the same magnitude move to the upside or take you up to the $11, $12 area. Now, will it get there? Who knows? But the probabilities are that it's going to head in an upward direction, and probably with a lot more force than just a regular uptrending stock. Chem was one that we recommended because of the best friend signal that gapped up, broke the T-line, broke this downtrend, and then gapped up again. So even though it's pulled back a little bit, the force of this uptrend tells us there's probably still a lot more upside. And I'm going to kind of, I've got that illustrated somewhere. Diana, I'll have to come back to it. Now here's one that's just been a quiet winner. GOL, came out of a fry pan bottom, did a best friend breakout, has just never come back below the T-line. So definitely a strong percentage return. I think we're up about 70% on this trade, and with one very simple criteria: it's never closed back below the T line. I've been trading options on this one because of the scoop type pattern. Little handle, gap down. What did this gap down tell us? You know, if you're gapping down at the bottom of a long downtrend, start watching for buy signals. Now we've got the little scoop pattern breaking out through the handle, and this is why you want to always know what some of your secondary signals are. This is the three white soldiers right here, which is a bullish candle. The next day they open it inside that candle, go bullish. Next day they open it inside that candle, go bullish. Basically what that tells you is that all the sellers are being taken out and the bulls continue to show that they're in control. So this not only has a first target right here, but this could be a strong slingshot effect to the upside. Just the combination of your analyzing what the signals are telling you and what the pattern is telling you just puts you in that much greater probability of being in the right trade at the right time. TTI, you see, has supported and broken this little down, potential downtrend. And notice what it did today. Even though it was down, it was only down 10 cents. Came right back to the T-line, used it as support. Now, I know you've heard me say this many times. The fact that it came down to the T-line and bounced back up is very significant when you've got the T-line on your chart, because nobody statistically has the T-line on their chart, which means it didn't come down to a level that everybody was watching. It came right back to the natural support level of the T-line. And because nobody has the T-line on their chart, they weren't pulling it back to a specific level. That was just the natural pullback that we could see much more clearly that was a pullback to a support level, because we do have the T-line on our chart. This is the kind of the illustration that I make the kind of the most powerful piece of information when using candlestick signals. If the signals are the graphic depiction of what's going on in human nature, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got a very strong trend analysis, system. So here's another one that people have been asking about. PLAG, same scenario, kind of a wedge formation, and they're starting to take this back up. And notice where the Morningstar signal occurred, right smack dab here on the T-line. Gecko, same scenario. So what's this kind of revealing to us? Well, obviously, if a stock has gone from 2 to 17.5 in 2 days and profit taking, there was something that made it go from 2 to 17.5 in 2 days. After the profit taking, that same that same information for buying is coming back in again. So after the profit taking is over, you still have what I'm reading. You still have the upside potential. So if the T-line is so magical, and if so, why doesn't everybody use it? Why doesn't everybody use the Fibonacci numbers? Why doesn't everybody use the Bollinger Bands? Why weren't you using it before you learned about it here at the Candlestick Forum? Because you didn't know about it. So that's about all I can say is all we're trying to do is show people indicators, the signals and the support levels that may not be utilized by other people. Now, there are probably a dozen other trainers like myself, like Hubert and Chuck Hughes and Steve Price. There's probably a dozen other people that now use the T-line or use the T-line in their teachings. Now, is that a big number? That might total, 3,000 people out of 30 million people that invest, so it's not like it's out there with any great number. MDXG, observe the obvious. Left-right combo, fry pan bottom. Now somebody, is John Tebow in here? Somebody was asking, how do you know what happened or what should you do? And this is the whole reason we do these trainings. What should you do if you come up here and then they start selling it off at this level? Well, you observe the obvious. Apparently they didn't break this out. You close out that position. So if this one opened lower tomorrow, you close it out. Here's one that's trying to move up. It didn't really, it's kind of semi-confirmed. This one was supposed to be doing a bullish flutter kicker. Well, it didn't confirm that day, but it came back up that day. So that's still a pretty strong reversal. But as you can see, it's not doing anything dynamic. So if you go to your one basic truism that you can stay long as it stays above the T-line. Now, if this opened lower tomorrow, I'd probably close it out because it told us that it wasn't going in the right direction. Core, Jason said he closed this out, which was the right thing to do today because it did close below the T-line. Now, it's still coming out of a fry pan bottom, but here's where making quick decisions allow you to keep from being caught in something where you boggle up your mental thinking. This one closed below the T-line after a bearish engulfing signal in the overbought area. Coming out of a fry pan bottom. And what's our very simple rule about a fry pan bottom? You can stay long as you don't see a sell signal and a close below the T-line. So what happened to the probabilities with seeing a candlestick sell signal in the overbought area and a close below the T-line? It went drastically, they got earnings tomorrow? Okay, that'd be another good reason why it come out of it. Now, what's the worst case scenario? They open it here and start trading it positive. You can always buy it back. But at this point, we know the probabilities have gone drastically against us after seeing, number one, a candlestick sell signal, and then number two, confirming the selling strength with the close below the T-line. Belt hold signals. Just a very obvious, I say not obvious, but visually identifiable. They come way out of the trading range and come back up into the trading range. In this case, it did a bullish engulfing signal. It can also do a piercing signal. But the results are, if you just look at it on a supply and demand basis, is if there was lots of sellers here and the bulls took out all the sellers, that means any buying from here has very little sellers in front of them. So where's our first potential target? Right up here. But it could even go further than that. I don't know how much further. Well. You can see you had a big downtrend over here. Now you've got a belt hold. And look where the belt hold, this helps us visually. Look where the belt hold signal occurred. right smack dab on the 50-day moving average. So we cannot observe the belt hold signal as being a good reversal, but you can pretty much bet that everybody and their brother has watched to see that there was buying at the 50, and that's why they're buying. So one factor that you always want to put into your evaluation is that if something looks good for an uptrend, it may not look good forever. So glue came back and touched the T-line and closed right at the 50. But now we know what we should expect from this point. Starting to get up in the overbought area, we better see it trade positive. If it starts trading lower, pretty much told us they ran out of steam right here. Which goes back to why I tell everybody, expect 1/3 of your trades to not work. When you put that in your mind, that way you get away from the emotional stigma of, oh, this trade didn't work, it's my fault. Just can tell yourself, oh, this is that 1/3 of the trades that didn't work, close it out and move on to the next one. Yogi, this is again, is observe the obvious. Where did a bullish harami occur? Right smack dab on the 50. This is part of one of those strategies that we're going to be teaching here in a couple of weeks, I think on the 17th, of where your high probability trade setups are, and the support and resistance level is one of them. A bullish harami right smack dab on the 50 in the oversold area, bullish confirmation. Now what do? We just stay long until we see a sell signal. NKTR, series of indecisive trading down here. Now, what we thought was going to happen was column reversal. They just slam it right back up into this area on a big candle. This closed dangerously low. I don't know if it closed above the T-line, which tells us one thing. John, which one are you referring to? This one needs to open positive to stay in it. If it starts trading lower, probably close it out. On Yogi, yes. Because it kind of came back and used the T-line and the 34 as support after a buy signal with stochastics coming up. If this came back up, let's say through today's open, I'd be a buyer because that tells me they're still going in this direction. And this one was what I was going to allude to. Had a nice bullish chart, then a bearish engulfing. It closed right on the T-line on Friday, which meant it had to open positive and trade positive. The fact that it opened positive and then came back down through the open of the T-line told you it's time to get out. That's not a good trade anymore. All right, I'm going to go through different ones, the different strategies, but before we do that, let's go through the biggies. Labu is in what I call a double doji setup, which means it had a strong signal. Get rid of that. And what can you infer by a doji and another doji on the pullback? That the profit taking or the pullback's not very decisive. Which direction is everything heading? Stochastics heading up. You got a strong buy signal. This one on a double doji, if it opens positive, the probabilities are pretty strong you're going to be trading positive tomorrow. Which means even if you don't want to be trading Labu, you could be looking in the biotech area and see which stocks are acting well. Nugget. That's not quite the same chart as what's over on. Got kind of the Morningstar signal. Another double doji setup. If they start trading this positive, you can be buying. So the double doji is a almost like the doji sandwich. It's if it pulls back a couple of days indecisively, and then they open up positive, that told you that the bears weren't very convincing. The bulls are in control. As we saw, the kicker type signal on Apple is still bringing it down. Good prospect that they could bring it down to the 200-day moving average. Amazon, and I'm showing these because we had a good strong day in the market today, but none of the biggies really participated. So as you can see on Amazon, evening star signal closed below the T line after failing at the 200. That's probably telling you don't want to be long Apple or Amazon right now. Not until you see something that tells you the bulls are taking control again. Ken, yes, I've got that. So we're gonna be getting to that one. NVIDIA, double doji. If this opens positive, you can start buying. Now, usually on these, when I say start buying, if it open positive, you want to start looking at some call strategies. And Netflix, this one was more compelling in that it was trading lower, but then came back up above the T line and did kind of a bullish harami. Another one that if it opens positive tomorrow, you definitely can be buying it with the anticipation your next target is the 200-day moving average. Tesla pulled back. This is why this is so obvious. Nobody has this on their charts. Yet look where Tesla came to, right smack dab to that level. What's that tell us about our uptrend? We're probably still in an uptrend because they hit a natural support level. Yes, so the double doji, you see this one over here in steel case. Now, again, this is where you can start adding the different elements. So when we go when we do our training session on the 17th, we're going to be picking out the strategies that work the best. So here's a strategy. You can see where the buying started right smack dab on the 50. This is your most basic of candlestick analysis. What is investor sentiment doing right at a level everybody else is watching? And what are our stochastics doing? This is what I call the support level, support trading. That you can see what's happening at the support. Now, once it broke this downtrending channel, kind of a double doji. If this opens positive tomorrow, you definitely can be a buyer. Mr. Candles, yes. What I teach here is just the analysis of what's happening. Now you take whatever you want to do with it and put it into your own trading, your own time frame. So I get a lot of people say, well, you show just daily charts. Yes, because I'm showing the signals and patterns. This same signal and pattern could happen on your 5-minute chart, your 10-minute chart, your hourly chart, whatever time frame you're trading. Yes, IBM is a morning star signal. I'd call it more of a cradle pattern because it's got three days in here. So if this opens positive tomorrow, yeah, it'd be a buyer. So now what becomes your analysis? Hold on to your individual ones until I get done here, because I've got lots. We're gonna be here for a while. IDT, as you can see, has a wedge formation setting up. And notice what's happening right here at the point of this wedge. A doji. That's not unusual. Notice what the the trend was here. It was just absolutely sideways. And then it's come to a point. And what's the ultimate point? A doji. So if this gaps up or gaps down, I wouldn't play it with a gap down, but if it gaps up, especially through this level, that's that wedge formation breakout. That's just one of the breakout patterns that you want to keep in the back of your mind because they can go both ways. We were watching Cal. Well, for crying out loud, I can't hit my butt with either hand here tonight. Did it 3 times in a row. I'm the type that doesn't like to make the same mistake 7 times. That's just a... Pretty much see that there was a wedge formation. In this case, it broke to the downside. The only times they break, that's where you can start going after them aggressively long or short. All right, the best friend signal is obviously one of the best. Doji, 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 best friend. Anytime you see this, even though you might think, oh man, it's up 10, 8, 12, uh-oh, light just went out. 15% doesn't mean anything. It means there's probably going to be a lot more upside. That was our recommendation. The reasons for our recommendation on ResMed last week or a couple weeks ago. Best friend signal. How long do we hold on to this? As long as it stays above the T-line. The double doji, we did. And on AMD, notice where the bullish signal came in. There was a bullish, this wasn't a signal, but this was. There was your bullish doji sandwich. Now you got a double doji. If this opens positive, where do you think your next short-term target's going to be? Right up here to fill this gap. The fry pan. Look at Kohl's. Nice big rounding bottom. And once again, notice where they pulled this back to today. Right smack dab to the T-line. This one you can be buying, expecting to stay long as it stays above the T-line. And BDSI. Now, here's one that you have to be careful of. I find it easier on myself if I don't count all the mistakes we have. Brian, I always tell people, if you learn from your mistakes, I'm one of the smartest traders you ever come across. Now, look what happened right here at the kind of the breakout level. Came back. Didn't close below the T-line. But what's it telling you? If you were long, and this opens lower and starts trading lower tomorrow, you probably want to close it out. What you really need to see is it come back up through this level, telling you the fry pan bottom's working. So this is also the benefit of knowing what signals you should be looking for or to recognize. We got kind of a bearish signal there after a doji. That tells me they didn't break out. Now we got to see if they're going to take it up through. If they bring it, start trading it lower, close it out, move on to something else. All right, now, on the best friend signal, usually if you catch it on that day, good. But here's one that I've discovered recently, that on a left-right combo, if you had been short, you close it here. You don't wait for confirmation. The left-right combo seems to have a lot of power in it, that if you see a left-right combo, you don't have to necessarily wait for confirmation next day. The probabilities are that not only will it be a positive trade, but sometimes even a gap up. Left-right combo. This is on CBIO. Again, it fits into that definition that if the bigger the signal, the more compelling there's been a change of investor sentiment. You're sitting right here, which tells us, let me make this smaller, pretty much broken out. There's probably a lot more upside to this one. Now, the reason I show these is because there's a lot of people that say, oh, this was just at 9 and now it's at 11. It's up 25% in 2 days. I don't know whether I want to chase after something like that. What we're looking for is what are the signals and patterns that are going to tell us we have a strong uptrend. So 25% in 2 days may not mean a hill of beans if this goes up another 100% over the next 3 weeks. We're also looking for the kicker signal. Here's AR, right? Telling you you've got more upside. First target, second target. And as you can see what a kicker signal does, kind of our kicker signal right here, took you right up through wave 1, wave 2, putting you into wave 3. DMC, kicker signal. Even though it's back and filled here a little bit, the fact that you have a kicker signal is usually an implication that there's going to be more upside. Not quite, but you're close enough to tell you that even though it's not a true kicker signal, I've got something in here to show that you're a little bit more conscious of what happens at the first resistance level. So even if this wasn't a true kicker signal, what do you got here? You got kind of a morning star signal, a back off, and then almost a kicker signal. This is all telling you there's been a reversal in that price trend. Okay, let's see. What did we just look at? Oh, IBM. This, to me, my definition, which doesn't really mean a hill of beans, is with 2 indecisive trading days and a big day, that's a morning star signal. With 3 or more, it becomes a cradle pattern. And that was our reason for recommending GL MD the other day, because of the cradle pattern still heading up. First target should be the 50, which equates to this one right here. But anytime you see this, that indecisive stage there, and then a breakout, pretty much tells you exactly what's happening. Here you got a cradle pattern with a best friend starting it. I would say CENX. I would think that the first target is your 50-day moving average and maybe going through to fill this gap. INSEE. There's kind of your cradle pattern, left-right combo. Now, this is the one I was going to use for illustration. This tells you the buying has started, but that doesn't mean you quit your analysis. Notice what happened right here at the 50, an evening star signal. That tells me that maybe I need to be out of this. So this opened lower tomorrow, I'd probably close out the trade. Maybe break even on that one. And this one, CYX. Well, what happened here? Something is terribly wrong. I don't know whether this is on the screen or not. Whoops. This one, I don't know why it's not coming up on the other screen, but this one, there's kind of your cradle pattern. Definitely a buy on positive trading. This one is probably going to be recommended tomorrow. So I don't know what this is. Okay, SP. No, that's just goofy. Something's wrong. Anyways, look at PYX on your own charts. Okay. Again, the reason I'm suggesting that you learn different signals and patterns. There's a big belt hold on ECL. What do we want to see the next day? Confirmation. Now, there's a lot of times where they'll open here, close here, and then trade here, and then after 3 or 4 days, they come back up. But if they open positive the next day, after that, remember what this just did. It wiped out a lot of sellers. So the reason we're pointing these things out is, how do you trade these? Well, these become very good option strategies to put on something where you know the probabilities are greatly in your favor. That was Pilgrim's Pride. This one's Chef. This one becomes a buy if it comes back up through today's open. Now, this may take 3 or 4 days, but if it comes back up through this level, it's confirming that signal. Nothing, Jay. A belt hold signal. Go back here. A belt hold signal could be a piercing signal. Or it could be a bullish engulfing signal. So they're one and the same. Just that a belt hold or a bullish engulfing could have opened here and closed here. The fact that you can see that it gapped way down of the trading range and came up makes it a belt hold bullish engulfing signal or a belt hold piercing signal. And or if it opened down here and closed right here and did nothing, it's still a piercing signal. I'm sorry, it's still a belt hold signal. I'm reading and talking at the same time. DPX, same scenario. It's probably got upside. So at this point, you watch, especially to see if it breaks through this area. This is what stimulated your buying. A bullish engulfing followed by a belt hold piercing signal. Again, that piercing signal is just a very clear indication that the sellers wanted to get out and brought it right back up. Trek. Where's your first likely target? Probably the 50-day moving average. EPX. Well, I wouldn't call it a bearish harami because I would probably put it in the classification of a bobble pattern setting up. The stochastics aren't anywhere near the overbought condition. Where am I now? Oh, back to the support area. SCS. You may just want to trade things that are bouncing off of a support area. Yogi was that kind of Whoops. Hang on for 1 second. Sorry about that. That's the old cat meowing at the door. Here, stay over there. So Yogi, bullish Harami right smack dab on the 50. And then HZNP. There's your piercing signal, right smack dab off the 200. Started your uptrend. So this is why, again, I'm suggesting to people pick out 3, 4 different trading patterns. Might use a support level buy signal. Or what do we expect after something like this? A 45 degree. EXAS. Big move to the upside. There was our message. There's our 45 degree. So knowing these different type of patterns allows you to put in a strategy. This is Mercury General. I don't know what they do. Maybe make Mercuries. What does? Look for a 45 degree off of here. So when I'm looking for a 45 degree, I might say, all right, what type of strategy? How long do I have for option expiration? EDS. There's your kicker signal. There's probably the prospects of a 45 degree over here. If I see bullish trading, then I look to see where the target might be and maybe put on a call spread where it's a longer term, maybe 2, 3 weeks out, 4 weeks, and just let it stay long as it stays above the T line. No. Over here. Oh. What I'm looking for. Now, 45 degree can be very enthusiastic or less enthusiastic. That's why call spreads might be the best. Oh, this cat is just driving me crazy. Come on. Okay. Oh. Stay right there. Okay. Try to type in something before the cat jumps back up here again. Okay, here's a good example of why you want to know the specifics of a candlestick signal. What's that signal right there? Good, Marshall. That is a nothing signal. So if I have my druthers, I'd rather go with something that I know is an identifiable signal because I know the probabilities. Dale, that was the trick question. Some people were going to say it was a piercing signal, but remember the details of a piercing signal. It has to close more than halfway up this candle, but it has to open below the low of the previous day's trading. Oh, Phil, for some reason, that stock is not coming up over here correctly. I don't know what the problem is. But it was more of I think it was more of a cradle pattern. Yeah, it could be considered a tweezer bottom, but it's really not a signal. Now, that doesn't necessarily mean it's not going to go up. It's just that it probably will not have the same probabilities or the same strength as something that looks bullish. Here's another one. Notice that this was not a signal. It didn't open below the previous day's close, and it closed above the previous day's open, but it's not a signal. So what's that kind of imply? That when you hit the first resistance level, it's probably going to run out of steam. So something like this. Okay. Notice that this one was almost a piercing signal. I would say this opened below the low, but it didn't quite close up the halfway point. And then notice what happened over here. Failed at the first resistance level. However, this now is your buy signal, a bullish engulfing signal, and a close above the T-line. So what do you add up in this analysis? Well, you had some buying. It wasn't really a signal. And then you had a buy signal that's kind of confirming that that's where the buyers are stepping in. Brian, yeah, we were kind of having a discussion of that. Everybody was calling that one white soldier, which was something I'd never heard of. And the reason I say that I've never heard of it is because I've looked at every single candlestick signal there has ever been, and I never saw a one white soldier. I think that's something that somebody has just made up recently. So here's the morning star type signal, and then notice what we've got going here. Opened here, closed here, gapped up. What's that tell you? Got a bullish flutter ticker in progress. So this becomes your buying, and then notice what confirmed it. So this is why we want to know the signals and the confirming signals, like a bullish doji sandwich. What's that tell us about this whole area? This is where the buying is occurring because it's got signals and confirmation. You look for your next target. Uh-oh. Well, if that ain't a fine howdy do. I don't know why Hub wouldn't come up. But here's Dillard's kind of doing your bobble breakout. Hub was also doing a bobble breakout. I think Diana asked about this. This is kind of your bullish flutter kicker today. But the fact that you have a gap up and a gap up, that pretty much tells you that when you start gapping it up, that's where the strength is coming in. This is why we weren't afraid to be recommending Chem after it gapped up and gapped up again. Remember, that gap up is pretty much telling you that they're coming in with great enthusiasm. So here's also why we want to know how the doji sandwich signals work. Look where the doji occurred. You're in an uptrend. You have a doji right on the 50. What do we know about the doji sandwich? We know that if it opens positive, the doji rule is going to trade positive. We also know if it trades positive that the magnitude of this candle and this candle are going to be the same, which also tells us if it trades positive, everybody and their brother that's watching this resistance level is going to start buying, maybe here or here or here. We have the advantage of knowing we can be getting in right here. So if you're a stock trader and or an options trader, you know you can be buying immediately because of what our expectation is for the next signal. a doji sandwich. Bullish Harami, doji sandwich. Another doji sandwich type day. What's this all indicating? Good strength. You watch for the next major resistance level. And the bigger the signal, the more compelling there's been a change of investor sentiment. There's a huge hammer, followed the next day by a bullish Harami right smack dab off the 200. Followed the next couple of days by a double doji sandwich breakout. You can definitely be buying this one on positive trading with the anticipation that your next target is probably at least going to be up to that area. Yes, but the booster is or that tail is part of the hammer signal. LK, a bobble breakout. Bobble breakout. I'm trying to think of which one had a bobble breakout not too long ago. Hold on for a second. I know. Thank you. Oh, that's okay. Thank you. Burlington was a bobble. Oops, that's why I couldn't find it. A bobble pattern is a J-hook pattern, much more defined. Notice our inverted hammer, bullish confirmation. Where did it fail? At the first resistance level. Pulled back. Notice what we did at the T-line. Did a morning star signal. Then it came back up the second time. It went through, which would have been a bobble breakout. And then it came right back here, which gave us what we should be doing the next day. If it opened lower, what did it tell us about the resistance level? It acted as resistance. If it opened positive, what did we have? A doji sandwich bobble breakout. The bobble was, it hit a resistance, it bobbled. When it came up through the second time, it confirmed the pattern. Now, if you took out the 50-day moving average, you can see you basically have a J-hook pattern. They do have one-way soldier. Yeah, I've never heard of one-way soldier. So anyways, that's a bobble LK. It's just a much more defined J-hook where you can see the resistance, you can see the support, and then it breaks out through the resistance a second time. And then if you took that out, you basically have a J-hook pattern. Oops, we did this. So this becomes a very easy entry. If it's open positive tomorrow, we can pretty much calculate that our next target is to the top here. And somebody was asking today whether they should short ATVI. Yes, when it broke or closed below this level with a bearish left-right combo, what do we got going on? Another bearish J-hook pattern. You can be shorting this one. Okay, so that's about all I got for tonight. Now, the reason we're kind of breaking these down into the different patterns is instead of just buying stocks that are going up in an uptrend, there's a bobble breakout right there. Came up, failed, pulled back, Morningstar signal the T-line, now a double doji or a doji sandwich breakout. This allows you to identify where a high probability trade setup is. So if I saw this open positive right after that day, what are all the conclusions I can make? One, that it opened positive after a doji. Two, that it was not resisting at the 50. 3, it was a bobble breakout. So I'm in right here, and I get the benefit of everybody else seeing that it's coming back up through the 50 and they're jumping in. RP, it's going to be very soon. As a matter of fact, that's the whole reason that we're going to do this training on the Big Bang breakouts on the 17th, is so that everybody can kind of get a formulation of what type of patterns they want to be trading. And any resistance level you can see, it could be the 200, it could be the 50, it could be, it comes up, fails at 50, and comes back to the 200 and goes back up. Anything where you can see, and a lot of times it's the T line that acts as the support level. Oh, I did one. What was it? It was one of the belt holds. So this is why we want to, what did I do with the belt hold? Hold on for a second. Oops. That's not a lot. Anyways, I'm just going to pick this one out as a example that the percentage return on this one might not be great. This one, but there was one where it was only a fairly small move, but the price of the options, as you can see, the option prices aren't real enthusiastic at this point. But this tells us, coming out of a fry pan bottom, that probably our trajectory is going to be a lot different than what the trajectory was prior. So not only do we have a belt hold bullish engulfing breakout of a fry pan bottom, but that usually gives you double reason to expect a much higher move to the upside. But maybe in 2 weeks, 1 week, I forget what it was, that coming up to this level might not be very economic based upon buying the buying calls, or maybe even the stock. I guess that would be about a 10% return. But there was a strategy, and I just did it for the illustration for our option training, that you could buy one and sell the other for 25 cents for it to go to $1, which is a which would be mathematically feasible. Okay. So RP, that figure, if we're going to be doing the strategies on the 17th, that more than likely we'll probably be doing the option training near the end of November or December 1st, right around that area. How do you find stocks like ATVI at a bobble breakout? Usually you're going to see things like this, bah humbug, right here, based upon, you probably already found this one on the big percent move, the failure, the pullback. So you probably already have this on your list. So when it failed right here and you took profit, what's the thing that you want to watch out for to see if it's going to do a J-hook or a bobble breakout? So you've already got this already in your probably in your arsenal. Abercrombie also, that's a bobble. Notice how it failed. Did a dark cloud signal. You close it out, and then you get ready to buy it back. That's a good chart. Now, what's your next So that bobble breakout, if this is wave 1, where do you think wave 3 is going to go to? Right up here to the 200-day moving average. That was on Abercrombie. All right. So the reason, again, I'm going to go back to kind of emphasizing that this is a high probability trade setup. You can pretty much calculate everything by looking at the bobble breakout, that it's going higher. You can pretty much calculate that if it's a J-hook pattern, wave 1 and wave 3 should be the same, which makes that your target. Now, what's the best way to monetize that? It might be a 21-24 spread. So we check the math on that. Another one that's not quite a bobble pattern, but close enough to tell you that's kind of a J-hook. Same scenario. If this is wave 1, wave 3 should take you pretty close to the 200-day moving average. Are you thinking about Yogi? Oh, yeah, he's always stealing my picnic basket. You can have, you can put an option trade on this because I don't even think Yogi has options though, do they? No, they don't have options. Okay, any more general questions on candlesticks? RP, we will be doing probably some Tuesday or Wednesday night option strategies just to get everybody primed up for a full 2 days of option strategies during a cold December weekend. All right, Jim, go ahead and do the double line. Not quite, but close enough to a J-hook type pattern or close enough to give you that same impression. So this would simply be a buy on positive trading, and this don't let it close back below the T line. All right, Jim, do the other double line. I've gone way too far. That was on bike. AOS we did because of the big bullish engulfing. You just stay long on this one. Now you could probably anticipate that if they don't open this and trade it positive, that at least they're probably coming back to test the T line. And VMC came back and did test the T line. If this opens positive, you can still be buying this one. Michaels. Whoops. That's your doji sandwich breakout. You can still be buying this one. You're kind of breaking this level. Next target is here. And there's a gap up here at the 200-day moving average. Citigroup, not a very good trader because of the percentage move, but it's heading in the right direction right now. So you can be buying this one if you like it. It's not going to give you a big percentage move, but it's heading in a bullish direction. DJ, bullish engulfing, you can buy this one also. Now, on something like this, you can see how steady this trend was. You can see where the reversal was. Look at your long G up here, and then they closed it below the T line. So here's another, where's the target? Maybe here, or this is where you put your Fibonacci retracement number on. So here, or here. Now, does that mean it's going to one of those levels? who knows? But if it does get to one of those levels and creates a sell signal, then you know that's where they were heading to. And Legend, this one you get ready to short. Wave 1, wave 2, they failed at the T-line. Notice how it moves sideways, failed at the T-line. I'd get ready to short this one. Gary, you were ahead of me. Yes. Reds, you can stay long. Now you have to watch right in this area. It needs to get up through there. If it fails here, I mean, if they start trading this lower tomorrow, you close it out because now you've got a wedge. When they come up and test the level and fail, I mean, they're not going through, obviously. You probably want to move your money until they do something strong enough where they come back up through that level. NRG, kind of a doji sandwich, breakout. Stay long. Next target should be at least up into this trajectory. SBGL. Nothing here of any great consequence yet. You're doing a little Morningstar signal, obviously, right here at the 50. Inverted hammer, kind of a gravestone doji. You're in the oversold area. If you're buying on strength, just have to watch to see if it gets up through the T-line. Oops, hold on. I goofed up. Yep. Scroll. Vips. EMEP. You can buy on positive trading. I'd give you a doji sandwich. Just make sure your volume's pretty hefty. Vips. Your kind of your Morningstar best friend signal. Obviously, watch to see what it does here. Now, if it pulls back, again, that's where your bobble pattern setup is probably setting up. That's a redundancy. UEL. Well, for crying out loud. This one's not coming up for some reason. I don't know what makes some come up and some not. Bed Bath and Beyond. Not a great looking chart, but it's as long as you're above the T line, you can stay with this one. SLS. This one, again, your little inverted hammer gap up. You can stay long. Just make sure your volume is hefty on this price stock. And I look like these stocks started coming back on the close today. This one, nothing yet, but I think CGC came up. That one I'd be more apt to be a buyer. Crone, same scenario. I'd be a buyer of this one. And ACB, you can be buying this one also. Crude oil is still heading down. Now, this is why I never make projections of what's happening in crude oil. I guess about a year ago, I kept thinking, and I probably even verbalized it, that with all the crude oil that they are finding in the U.S., the Balkan field up in North Dakota, They found a huge field in Texas, 3 times bigger than the big fields down there. I think they've found more on the North Shore of Alaska. So, and the technology is improving so fast that you don't hear too much about dry wells anymore. The technology is they kind of know where it is, and they have the drilling bits and all the drilling stuff that's computerized that can go get it. So I thought at that time it would be hard for crude oil to go up very much in price. Well, that's when it was at 45, and it immediately went up to, not immediately, but consistently went up to 75. Now we're back down toward about 63, and I guess the illustration of that was with the Iranian, can't think of the word, but cutting back on letting them export Iranian oil. It's not affecting price anymore because our domestic production has increased pretty dramatically, like 2.5 million barrels a day. So that should kind of keep prices a little bit dampened. S-Fix, all you can do here is stay long as it stays above the T line. And Home Depot, stay long. Morningstar type signal, stay long as it stays above the T line. Peggy, big breakout. Expect a 45 degree to come off of there. Apparently earnings, I would imagine. We did Advanced Micro. If it opens positive tomorrow with your double doji, you can be buying it immediately. Vicky, nothing there at all. Big. This one, still not a very majestic chart. Nothing. I'm trying to figure out something good to say about it, and there's not much. I'd be someplace else. This one's got more of a J-hook setup to it. That one I'd be more apt to be a buyer on strength. And this one, a failure at the 50 on a bearish engulfing. This is a blue ice failure. Definitely watch to see when it hits the 200, and then see what it does at that level. NTWK, you stay long, but you've had kind of an evening star signal. So this one I'd be set up to say it has to open positive and trade positive to stay in it. If it opens lower, I'd be taking profits, anticipating wave 1, wave 2, wave 3, wave 1, wave 2, then you could get ready for wave 3. Schlumberger, nothing yet. I wouldn't be short, but I wouldn't be long. Oops. Halliburton, that one I'd be more apt to be going long because it did come up through the T line. CFG, nothing yet. As you saw, when it got up to the T line, it failed. If you're long, it has to start trading positive. If it starts trading lower, close it out. You now have the prospect of going into a bearish J-hook pattern. Lulu, not any great strength there. You do have a cradle type pattern. If you like it, you stay long as it stays above the T line, but you can see it's kind of not showing any real great vigor at this point. VRSN, if it comes back down through the low of today, I'd come out of it. What you need to see is that trade positive so you're in a 45 degree. I think we did Fred earlier. It needs to open positive. If it opens lower, I'd come out of it because that tells me that it failed at that at the recent high. ENRC, and another one that has to open positive. If it opens lower, you don't have anything really going for you. And again, that's very simple to analyze based upon the doji today. It's going to move in the direction of how they open after the doji. Paycom, if you're short, you just stay short. You don't want to be going long on this one. You see a buy signal above the T line. Now, stay long on this one. As long as it stays above the T line, you definitely want to see this open positive. This one does have a piercing signal gap up. But you've got this downtrending channel, which is already hit, so you definitely need to see strength coming into this one. Passy, if you're long, it needs to break out of this little wedge area. All right. CGC is a good, came up through the T line. You run into trouble. If it opens lower, I'd close out the position. It's telling us that they don't have the strength. Then the worst case scenario is you just put a buy stop above the highs. That if it turns around and comes up through there, that tells you that they are confirming the buy signal. But right now, as you can see, it's telling you there's lots of indecision right here. Bison, another one that might be doing a bobble pattern. Notice your hanging man open lower below the 50. I would suspect they're at least coming back to test the T line. AT&T is just not a trader. I wouldn't be long or short. There's just not enough movement in that one. And Teradyne, again, if this one opens lower tomorrow, you take your profits and wait for it to come back up. Silver, nothing. Sideways. I'd be someplace else. It needs to break out. And PNC, you stay long. You have a hanging man. I would, I wouldn't want to see it trade lower because that means it's coming back to test the T line. Overstock. This one you close out, or should have closed out. It failed. And now, if it came back down through this level, I'd probably even be going short, telling me that my downtrending channel is still in progress. AU, that's a good little breakout. Kicker, not a kicker, but he broke out. You can stay long on this one. Verizon, not very exciting, but another one that as long as it stays above the T line, you can stay with it. Oh, let's see. Crone has about a 20% upside up here. And CGC has a 15%, but it looks like it had a little bit more force to it. So they're probably about the same, Gail. So if I was going to buy one of them, I'd watch to see how each one of them opened tomorrow. Okay, tomorrow night, I guess we're doing some of the breakouts. But I'm sure we're all going to be drinking beer and watching the returns. So try to do that pretty quick. All right, everybody, have a good evening. Oops, kept you way over time again. We'll see you bright and early tomorrow morning.